All right, everyone, welcome back for another episode of This Week in Charts via Conover Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts, analysis, and a live day trading. So let's get into it this week. So a lot to cover here. I'm going to try and do it all for you, but a lot of headlines to kind of get through this week. And feels like it was 2 weeks ago that we had the tariff deal, trade deal with China, but that was really last weekend. Now, again, it wasn't an actual official trade deal, but it was an agreement to pause and the kind of discussed terms. And the market obviously liked that. Now, I want to take you back to last week. We talked about, we'll go to the SPX here. I talked about the possibility of a kind of a dip into the later part of this week. This past week, so Wednesday, Thursday, maybe Thursday, Friday. That was prior to the knowledge of the deal getting done. And on Monday morning, when we gapped above, we talked about this was kind of my thought. We could go kind of float up to 5,800 and then maybe pull back kind of by the end of the week. Not necessarily having to close flat. We could still close positive. I thought we would see like a little bit of a dip that may start even into next week. That obviously wasn't the case. When we gapped up Monday, I very strongly urged everyone not to fight this. This is a very powerful move when you gap above a resistance like that. This pivot in this area right here, 5,800, and gapping above the 100 and 200 moving average. It's not something you want to fight. You're going to see continuation there, and that's what we saw all week long. Now, that said, we are very stretched here. And now that we've done what we've done, I do think next week we could see an actual dip here, more so what we thought would happen in the later part of this week. I think that'll happen, probably by mid next week, if not sooner, right on the open. And we already have a catalyst for that. We actually have two. I'll go over the lesser one right now. But the lesser one here is just the Japanese bond yields, 40-year. They're absolutely surging right now. There's been a lot of chatter right now that I've heard. Again, this is just chatter, speculation, that they may hold some emergency meeting, and that could shake up financial markets, needless to say. The second much bigger headline came yesterday right after the bell, and it was very conveniently timed. We can take a look here. This was posted by Bar Chart on May 15th, so that was Thursday, and you can see this surging credit risk here again. So day before, Moody's downgrades the United States from AAA to AA1. We've got surging credit risk, meaning investors are selling bonds, and it was very convenient to me that they waited, and they've done this a couple of times before. They waited until right after OPEX Friday, specifically after 4:15 when SPY and QQQ clear. But the futures were open, so that indicates that the administration knew about this, right? And they waited until they made sure everybody, all their buddies, got their options to expire, and all these calls to expire in the money before they dumped it. Now, if we take a look at the SPY in the after hours, you can see we closed at basically almost 595. But if we flip our after hours prints on, you can see we wiped out all the gains for the day by the 8 p.m. close. A lot of people don't know it, but New York does trade till 8 p.m. After hours, even on Friday. But nonetheless, so it's not like a huge sell, but if we had closed here at 4 p.m., that would have been red for the day. So I think right now, we're likely going to see some sort of a pullback action here. This market, got very, very stretched here. We were up 5 days in a row this week. I mean, this is a powerful thrust, and don't get me wrong, it was a powerful move. So I'm not surprised there was continuation. A lot of people tried to fight it early in the week, and I strongly urge people not to do that. And actually, you wanted to look for momentum to continue. But this is a crazy move. I mean, we're up. Let me just check S&P points. I mean, we closed at 56.59, and then we closed this week. I mean, that's a 300-point move almost to the penny in 1 week on SPX. That is a gigantic gain. So we could see, maybe some pullback action towards this 100, 200 moving average. maybe even 5,700. We got a lot of gaps here. And we could see some action maybe to fill some of the lower ones, but my kind of base case, kind of ever since this April low, was to look for kind of a grind up into the summer. So I'm not so sure that we're going to really do a ton of dipping. We I think we definitely will. We're not. I don't. I'd be very surprised if we just went straight to all-time highs without any sort of a pullback here, especially given how stretched it already is. But I'm not necessarily in the fill the 5,300 gap right now. I'm not in that camp. I think we've done way too much damage. To me, this gap here is a bull impulse. But in the near term, we are very, very stretched. Need to do some backing and filling, and the credit markets are going to have to adjust to this now. So that's something that is it's unavoidable. It's not a nothing burger. So that's kind of the long and short of it here. If somehow we were to, I'd fight this off for the Monday and Tuesday. 6,000 is an absolute massive wall right now, and that's in the options market as well as psychologically. So that would be kind of for me right now, your kind of max upside. For next week, it's possible we could fill the gap. I'm not really kind of thinking that though. I'm thinking maybe we get into the gap area and kind of test that 200 on the downside there, or, on the other side of this. But nonetheless, yeah, just a wild week here. And again, the reason we gapped up so much on Monday, a lot of people were crying foul about it, but the market knows it wasn't a quote unquote real trade deal. The reason it gapped up so much is because it wasn't priced in. It was pricing in just negotiations. It wasn't pricing in that much progress, and that's what caused those short hedges to get roasted. So it's important to remember that it's not just like panic buying or euphoria. A lot of the time, these moves are forced buying, and often propelled by hedges being closed. So that's kind of the long and short of it this week. You can see the NASDAQ again, same thing. Look at gapping above 500. That's not bearish, right? So it's very strong. Now again, it's very overbought here. And a lot of this positive gamma will roll off Monday now with OPEX being over with. So we could see some weakness here. We see some profit taking and a little bit of normalization. And all those hedges that were getting destroyed here are likely mostly gone now. They are not there. And obviously QQQ 500 will be a big level to hold. Below that, you got the 200 and 100 moving average. So easy to look at there. IWM again gapping up. We went sideways all week. This 210 area has been major resistance for a long time. I think we got to go all the way back. Yeah, we can go all the way back to 2021. This has been a big point of control. Clear to see there. Dow here also up 80 basis points. This had a really good Friday, closing above again the 100 and 200, and it did back off like everything else did in the after hours. Although I think it did close basically right on or above those in the after hours. Again, I don't really count after hours prints as like the close, but in this case where we had a significant headline, you definitely have to take into account. I'd be interested to see the Globex open Sunday night. Semis, again, really strong week this week. We got NVIDIA earnings, not next week, but the week after. A lot of trapped longs up here, though. So this 250 area is a lot of resistance. IGV, my favorite still, very strong. Look at this recovery. Don't get me wrong, this is ridiculously overbought here. But just what a power move. It's not even that far from, what is this, like 5% from all-time highs, not even at this point. What a chart there. Cloud software, cybersecurity, going to be big here. Palantir recently making a new all-time high this week. Big component of IGV now. Transports, again, good week. And again, we talked about the bear wedge. I said, this is, I don't like that. But again, we moved outside of it. We just gapped outside of it, right? So that is a failure. Right? So that is bullish when you can make a pattern like that fail. Weekly chart, closing back above the 200. If we can get through this this 100 moving average, which I don't think it does right away. Your next big level to back check to is like 15.7. So all these pivots right here, 200 MA, and then that big trend line right there that's upsloping, all in that vicinity, really. All right, interest rates, we're positive this week. So that hurts the Fed's ability to cut, but I'm in the camp this is going, the 2-year should go down. The long end, though, listen, I would not want to be, I get, questions about, should we get long, TLT or bonds here. I would not fight this pattern on the 30-year. This is a major, I mean, you have a huge breakout here. This is a long-term secular breakout. And you've got, I mean, a pretty good looking cup and handle. I mean, there's really nothing wrong with it. I mean, I'm not saying TLT can't catch a bid or something, but the dominant trend here is higher. And we're seeing that. We're seeing all the signs of that here. Capital leaving, the tariffs, the debt issue, credit downgrades. These are all related, and they're not going away. Housing held up nicely. XHB, VNQ were nicely green on the week. Those were firm. Here's another positive for bulls. XLF just off of all-time highs. KRE, KBE gapped up, then went sideways all week. Broker dealers closed at new all-time highs as well. So impressive stuff there. Oil did manage to scratch out a gain, not a huge gain on the week. Again, we talked about the 64 area, and it got above 62, but 64 is next. If it can do that, it's got a good chance to get a pretty nice rally going here. Oil had a good week here. Again, that also up on the trade deal news. XLE getting outside of this island here, and it's trying to consolidate to break through 86. XOP, I gave this one out for free, and I did not take it myself. I'm still kicking myself for it, but I really liked this pattern here. And yep, 1-2 outside move and then the gap up Monday. So that would have been a nice one if you guys, I'm sure somebody took it. I talked about it for like 2 weeks. So, but yeah, nice move on XOP there, oil and gas exploration. Very nice move this weekend. OIH is still a laggard. I'm wondering if this is just going to be, is this going to rally just because it's so hated at some point? Speaking of hated, I did an article on healthcare stocks too, and I think if we do see a pullback in the NASDAQ, XLV is an interesting spot to be in right now. If you want to check that out, it's on carnivoretrades.com. But suffice to say, we had another, just really quick, UNH was in the news. CEO is stepping down. They're also getting sued by the DOJ or getting investigated. This was a monster level though. 618 from the GFC lows. And piercing this big trend line here. This whole area has not been back tested since it broke out. 250 whole round number. We actually took this in the swing trades, and we're up. I think like at least 10% or something like that already. I think we got in at 258, closed at 291. So nice 2-day gain there. But I do think healthcare is very hated. In fact, it's actually. I'm just going to pull it up for you. So it's actually relative to the S&P at a underperforming by the largest margin in 24 years. So if you want to talk about hated, that certainly meets the criteria. I do think XLV healthcare could see some rotation if we see tech start to cool off. Anyway, not to spend too much time on that. Dollar index this week, again, got to balance with the trade deal here. Dollar yen did too, but it came back in on Friday. So this could, if this is another lower high, that's going to be a problem. We talked about that Japan yield too. All right, CCJ held up all right this week, uranium stocks. URNM and URNJ did back off by the end of the week though, so they're going to need higher lows here if they're going to break through these resistance spots. Gold still acting very well. It did back off. Right, so we had risk on Monday, and that caused gold to back off. That's normal. but it held the 50 MA. From what I can see, and I've done a lot of looking into this for June, both GLD and SLV, because gold futures do trade options, but not the way that the equity markets do. GLD and SLV are their leaders in that regard. But nonetheless, this looks very supportive, really across the board into June. So it's actually looks like 300 might be a little bit of a kind of a equilibrium, but it should get supported by dealers. The delta is very positive. Same thing with SLV, especially if it can stay above 29. So I think gold and silver are in good shape here. Silver got a little bit of a bull flag right now. I'd like to see it push outside of that and then maybe form a, here, let me add some time here. So I'd like to see it kind of pop through this and then form a higher low and then push up. I think it can, if it can do that, I think it can go through this area. But this is a breakout that is literally decades in the making. So it'll go on its time. But nonetheless, holding up well. Platinum and palladium getting interesting too. Though they actually firmed up a little bit this week. And yeah, PA getting outside of this area, get a little inside bar. We'll see if I can get a pop. Lastly, copper, I have nothing for you here. So this is, this is just too volatile. And I would say short term, give the bear inside bar the benefit of the doubt. That's really all I got. I don't even like these levels. It needs price discovery. All right, crypto, Bitcoin held up really well this week, and it's still consolidating as I do this. 20 MA has caught up to price here. And yeah, this is good. You got a nice bull flag right beneath all-time highs. So we'll see if it can go. We'll see if it makes a move. But yeah, held up well, no problems really. And doesn't seem to be too affected by the debt rating change. So not that it necessarily needs to be, but just to point that out. But anyway, yeah, big picture, really, really impulsive move here this week. Just an incredible move, and we squeezed. I mean, just look at the intraday. It's just straight up all week. So very, very strong here. That said, very, very stretched as well in the near term, particularly tech. And next week, all that positive gamma for that May expiry will roll off. So market may be susceptible to some pullbacks here. Again, 5,800 is going to be a big level. And then you got the 200 MA below that, we can go fill the gap. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon and come find me on ConoverTrades.com. I'll see you guys all next week.